Hi, welcome to this week's portfolio update. Here in Robinhood, you can see the current portfolio is worth 1.7 and it's a 1 day. So last Friday, I was on profit yesterday, $136. So if you see, it went up to 2000 or something dollars, 1896, but I was not able to sustain that and it came back and hit the stop loss. And after that, it went up again. So that's the issue with the day trade. And if you go to the 1 week chart, I'm on a loss, basically $163 I lost last week. I think it's option and mostly I lost on the earnings play. So I prefer just to stop earnings play for the time being. Now, if you see the option, I can explain one of the option QQQ. I'll explain the credit spread. So the credit spread, what I'm doing is like I'm just going through the. I'm selling the 436 call and buying the 437 call. So in turn, I'm getting credit of 0.12 for one credit spread. So it's actually two. So we will get $24 on a credit. And right now, as the market went down, this call credit spread is on profit. So call credit means like we are betting against the call. So if the market goes down, we are on a profit. And it went to zero point zero 0.07. So if you see here in the history, actually I rolled the call credit spread. So I was holding Friday's one and it was almost on a low. So I rolled it to the next day on Tuesday. And that's why like after that market went down. So market was up morning and I was on a lows. I rolled it. So that's a good thing on the rolling part. Now it went down and also I got an extra while rolling extra income. So this is the one like 0.39 I'm selling and 0.27. So for this one, the collateral required is only $100. So because the $1 gap, so we are betting $100 and gaining $12. So our maximum loss would be $88. But as it is far away from the strike price now, I felt like this would be not be a loss until like the market opens on a high from 429 to more than 436. Otherwise, even if it reaches to 435, we'll get time to roll. So if it reaches or crosses 436 pre-market, then it's a risk, like even rolling won't work. So rolling, we should do it before this reaches point 0.5, like 50 cents. So before that, if you roll, you will get more extra money for the rolling, as well as you'll get one extra day, so that if the market reverses the trend, it will go down. Now going to the core long-term stocks I bought. So I just bought Costco, Disney, all the shares I updated more. All the shares I bought, so I think like I'd buy something like $5 for each of the stocks. So we'll see that in my portfolio chart. So if you can see, it would be exactly matching with the shares what I am holding. Also, I bought Carter's also. Going to the local host site I hosted locally. We'll come to the financial independence check. Before that, we'll go to the dividends. So if you see the dividends, Disney, it's a new thing. Like last week I updated, so it increased 50% from point 0.3 to 0.45. Other than that, Gen declared the dividend. Now Gen previously they were paying 0.125. Now the upcoming dividend is 0.13. That would be on March 13th. So the percentage increase is 4%. Also, Carter's, they declared the dividend 0.75. So there's no upcoming dividend, so there's no change from the prior dividend. So that's why it's 0%, and it was updated on last week. That's why it's on blue. Other than that, the expected dividend is Comcast. That would be on April 24th. Union Pacific, it's a railroad company. It's expected to on 29th March. And financial, it's on AFLAC, the financial sector. It's expected on March 1st. Going to the portfolio right now, my current portfolio is worth 257.55. I added a yield on portfolio, so right now the yield I'm getting 0.62 per month, and the yield, if you consider out of the 257, yield on the portfolio is 2.87, and yield on cost. So I invested $253. Right now the portfolio is 2457. So the yield on cost is more like 2.92, and we'll track the drip shares as well. So these are the shares EPD. So right now we didn't get any dividend. That's why drip shares are zero. So these are my long-term stocks, and I invested $21. I added more to this. So the last one I added is J&J. $30 I added Costco. Also I added $5. So that's why $30, and Comcast. Why I added these three is like right now those are on the less profitable one. So the average cost price, if you see the color, right now Comcast is 41.24 and average cost price is 41.88. That's why Comcast is alone in red. All others, what I bought, it's more than that price. That's why, like, if you see Costco average price is 719 and current price is 723. And also the dividend yield for each of the stock. So if you see the top one EPD, it's paying the more dividend 7.49, and MAN again 4.55, and we have Stella, STLA 5. Stellanis 5.61. So based on this, we are getting 0.62 on average. So let's calculate the financial independence date. It's like 0.62 with an inflation rate of 3%. I'd be getting right now for me to retire or to feel like I'm retired financially is like 5329 monthly target. And with the 0.62 and the increase 3% inflation, if the dividend increase more than 3%, let's say 5% is the dividend increase, the financial independent date would be 24770219. At that time, my age would be 492, and I'd be receiving 4 billion as dividend per month. That's a huge amount right now. Maybe at that age, this amount would be not that much considerable because the dollar value is reducing. So that's it for this week. We'll see you on the next week. Thank you.